Uh, Welcome to the lesson online. My name is Kevin Nkwera. I'm a teacher of accountants, and today we are discussing, or we are going to revise, accounting for loyalties. I'm expecting that at the end of this topic, you'll be able to explain what is the loyalties and the nature of loyalties. Also, we will see the important terms which will be used in accounting for loyalties, such as the minimum rent, etc. Also, you'll be able to write books entries in the books of account of Lisa, and also you'll be able to write the entries in the books of Lise. Now, our specific objective, we will cover only accounting entries in the books of Lisa or landlord, and accounting entries in the books of Lise or tenant. Now let's now start discussing or explaining the meaning of loyalty. What is a loyalty? The term loyalty means a payment made by one person called lessee or tenant to another person called lessor or landlord for using certain asset which belongs to the latter. In other words, it's a payment made for having the privilege of using some right. Now, nature of loyalties. Loyalty may arise in respect of the following: for the extraction of minerals from the ground; 2, for publishing books with the permission of the author; 3, for using certain patents for the manufacture of articles for sale; and 4, for the use of artists' work, for example, music, movie, etc. Now, as I said earlier, we are going also to cover the terms which will be used in our topic. Now, 1, it's a minimum rent. Minimum rent is also termed as dead rent or rocky rent. Minimum rent means the rent payable by the tenant to the landlord, irrespective of whether he has derived any benefit or not out of the property let out to him by the landlord. 2, short workings. Short workings is the excess of minimum rent over the actual loyalties earned by the landlord. For example, of short working, if the minimum rent is 10,000 per annum and the royalty is 50 cents per ton, then 20,000 tons must be produced before the minimum rent is covered. That is 10,000 times 50 cents. So you'll get the 20. If the minimum rent is 10,000 per annum and the royalty is 50 cents per ton, then 20 tons must be produced before the minimum rent is covered. That is to reach it to 10,000. Now, in case the production happens to be only 15,000 tons, the actual royalty would be 7,500. That is to say, 50 cents times 15,000 tons. So the short working would amount to 2,500. That is the excess of 10,000 over 7,500. Now, this is, of course, a loss to the tenant. So it will reach time when a tenant now can recover this loss, and that is a recoupment of short workings. It means that short workings allowed by the tenant to the landlord will be recoverable by him from the landlord during such period when the actual royalty is more than the minimum rent. Okay, after having seen the definition, the important terms, now let's move to the double entry. Let's move now to the double entry. Now, in this journal entries, we have three categories. The first category, it's when royalties are due, when landlord now is supposed to be paid. That is the first category. The second, it's when there is a short working. So we are supposed also to add up to the due for landlord. Then we have payment to landlord. And lastly, when we are closing now the entry. So let's start now with the first category, where we are required now to make a landlord to be a creditor. So in order a landlord now to be due, we are supposed now to debit royalties account and credit landlord's account with the actual amount. Then for short working, that is the difference which we are supposed to pay with the fixed sum, that is the minimum rent. That is the difference between the actual royalties and the fixed sum. We are saying it's a short working. So that difference now, we'll debit that short workings and we will credit a landlord account. Then after that now, we are debiting landlord account and credit bank account. Then for closing entry now, the last category, we are transferring now the manufacturing account, or it depends. Whether it's a production like mining, etc., we use manufacturing account. But if it's a sales, we use the income statement. So it depends with the question. So we'll debit manufacturing account or income statement and the credit royalties account. Now, if there is the excess now in the actual royalties, we will debit landlord account and the credit short workings account. That is recoverable. Now, if we failed to recoup, so we are going to write off that amount which we filed, and that is will go to income statement. So we debit income statement as an expense and the credit short workings. Okay, let's now do this question so that we can write entries in the books of tenant. Now, Iringa Coal Limited is a lease of a mine on a royalty of Tanzania shillings 20,000 per ton of coal raised, with a daily rent or minimum rent or rocky rent of Tanzania shillings 40 million per annum, and the power to recoup short workings during the first 5 years of the lease. The output for the first 5 years were as follows. Year ended 31st March 2015, 1,500 tons. Year ended 31st March 2016, 1,800 tons. Year ended 31st March 2017, 1,900 tons. Year ended 31st March 2018, 2,500 tons. Year ended 31st March 2019, 2,600 tons. For the 5 years ended 31st March 2015, 2016, 2017, 2018, and 2019, prepare A, journal entries to record the transaction in the books of Iringa Coal Limited. B, royalties payable, landlord, and short working accounts in the books of Iringa Coal Limited. Now, to attempt this question, we are required to start with the basic workings. So our basic working now will be a statement of royalty payable. So solution now, we'll start solution. We'll start with the basic workings. So we have a statement of royalty payable. Now, in this table, we'll have the column for year. We'll have the column for output, that is the tons, which we have produced. We'll have the column for actual royalty. We have the column for daily rent or minimum rent. We have the column for short workings. We have the column for short workings recoupled. We have the column for short workings recoverable. And we have the column for payment to landlord. That is the, let's write the payment. So our years are 2014, it's 2015, 16, 17, 18, and 19. So 2015, 2016, 2017, 2018, and 2019. So according to the question, in the year 2015, tons produced were 1,500. So 1,500, 2016, 1,800, 2017, 1,900, 2018, 2,500, and the 2019 is 2,600. Now, to know the actual royalty, according to the question, a royalty is 20,000 per ton. So we'll take now 20,000 times 1,500. And our table now will be in terms of thousand. In terms of thousand. So we'll just take 1,500 times 20,000. But we will write figures in terms of thousand. So if you multiply, you will get for the year 2015, you will get 30,000. You'll get 30,000. And for 2016, you'll get 36,000. 2017, you'll get 38,000. 2018, you'll get 50,000. And 2019, you'll get 52,000. Our daily rent is fixed, that is 40,000 in terms of thousand. So it's 40,000 for all years. Now, short working now is the difference between the daily rent and the actual royalty. Now, for the year 2015, the difference is 10. So we write here 10,000. Here the difference is 4,000. Here the difference is 2,000. Here now there is excess. So here now it's a time to recover our short workings, to recoup. So the excess is 10,000. So it means that it will recoup 10,000, and the balance will be 6,000. But in the year 2019, we have the excess of 52 minus 40. So we will recoup the remaining amount, which is 6,000. So we don't have the amount of irrecoverable because all money we've already recovered. So it's nil-nil. Therefore, the payment now for the year 2015 to the landlord will be 40,000, and 2016 will be also 40,000. 2017 will be 40,000. 2018 will be 40,000. And 2019 will be 46. Now, after having this table now, we are going now to pass journal entries before posting to the ledger. So our journal entries now. So let's now start with the category A. We want now to make a landlord due. So as we seen the journal entries earlier, we debit royalties payable account for the actual amount of the royalty, that is 30,000. So 30 million. We will also debit the short workings, the difference, that is 10 million. And we are going now to credit the landlord. $40 million. So category B now, it's a payment to the landlord. So we are going now to debit landlord, 40 million. We are going to credit the bank account, 40 million. Then on the closing now of the entry, we are sending this to production because it's called mine. So we transfer now to manufacturing account. So we debit manufacturing account, the actual amount, that is 30 million. And credit the royalties payable. $30 million. This is for the year 2015. So the year 2016, our double entry will be the same because we are still with short workings. So we are going now to debit the royalties payable, the actual amount. Now for 2016, the actual amount is 36 million. So we are going to debit the royalties payable, and also we are going to debit the short workings of 4,000, and the total will be credited to landlord. So we debit royalties payable, that is 36 million. We are going to debit short workings, that is 4 million, and credit the landlord, shillings 40 million. Then 2, we are going to pay the landlord. So B, we debit landlord 40 million, and credit bank 40 million. And the last to transfer to the income statement. So last now on a transfer, we debit manufacturing, that is C. We debit manufacturing account, and the credit and the credit the loyalties. Loyalties payable. The actual amount. The actual amount here is 36 million. Then 2017, the actual loyalty is 38 million. So we still have a short workings of 2 million. So we are going to do the same as we did in 2016. So 2017 now, A, we debit loyalties payable. Loyalties payable. The amount is 38. We are going now to debit short workings. Short workings, 2 million. And we are going to credit landlord. $40 million. Then to payment. So B now, we are going to debit landlord 40 million and credit bank 40 million. So C now to transfer to the manufacturing account. So we debit manufacturing with the actual amount. Then category B, making a payment. So we'll debit landlord 40 and I will credit bank 40. Then category C is to transfer this actual royalty to manufacturing account. So that is C, debit manufacturing, the actual is 50 and the credit the loyalties payable. The same amount. Then 2019, category A, it's actual loyalties, which was 52,000. So we debit loyalties payable shillings 52,000. We credit landlord. We credit landlord now. It's 46, and we credit short working. $6,000. Then category B is to make a payment. So we debit landlord. We debit landlord 46, and we credit bank 46. Then the last category is to transfer to manufacturing. So we debit manufacturing. We debit manufacturing account. That is the actual, and the actual was 52, and we credit the loyalties payable. So we are through with the journal entries. Now we take these journal entries into recording into the ledger accounts. So let's now open the ledger accounts. So ledger accounts. Now we start with the loyalties account. So loyalties payable, debit, loyalties payable account. Now, as far as the journal entries are concerned, we debit landlord, we debit loyalties payable, and we credit landlord. Then we credit loyalties payable, and we debit manufacturing. So here now we start with the year 2015. We just debit. Here it's landlord, which is 30,000, the actual. Also, this will be in terms of thousand. So to close this, we just take credit and debit manufacturing. Then 2016, the actual is 36. So we just debit this account by 36, and we transfer this to manufacturing. $36. Then 2017, The actual loyalties was 38. So we debit the loyalties payable by writing landlord. The amount is 38,000, and we credit by writing manufacturing 38. Then 2018, the actual was 50, and we are sending this to manufacturing 50,000. Then 2019, landlord, the amount, the actual was 52,000. So we send this to manufacturing 52,000. So this is how loyalties payable will appear in our ledger accounts. Then another necessary ledger account is the landlord account. Now, in this landlord account, we have bank account entry, we have loyalties actual, and short workings, either recoup or loss for that year. So let's start with the year 2015. The amount which we paid the landlord was 40. So also in terms of thousand. So bank 40. Now this coming from loyalties. From loyalties, that is 30,000, and also coming as a short working. Coming as short working, that is 10. So total it's 40. So 2016, loyalties were 36. Loyalties 36. Then short workings 4,000, total 40. So amount which we pay is 40. Twenty 17 loyalties. 2017 loyalties were 38. Then short workings 2, total 40. Then bank 40. Then 2017 loyalties actual 50. So here there is a recoup. So short working recoup, that is 10, and the remaining we pay, that is 40. Last year now, short working, it's 6. Bank it's 46. Total 52. And the loyalties 52. We are through with the landlord account. Now let's finish by writing the short working account. So for the first year was 10 in terms of thousand. So landlord, we just completed the double entry from landlord account. So landlord, it's 10. Balance scale down, it's 10,000. Then another year, it's we start with the balance brought down. That is 10. We start with the balance brought down. That is 10. Then the short working for the year. Now it's 4,000. So landlord 4,000. That is 14. So balance scale down. It's 14,000. So another year now, balance brought down. Balance brought down, it's 14. And we have the short working of 2 million. So we write here 2. So it's 16. Then we will have the balance scale down of 16. Then balance brought down. Balance brought down, it's 16. This year is a year where we recouped the amount. Now the double entry, as we've already seen earlier, is that we debit landlord account and we credit the short workings account. So according to the short working, so far we have 16,000. So we start now to recoup 10,000. So we write here now landlord. Landlord 10,000. Balance scale down. It's 6,000. Now another year, which is 2019, the balance brought down. The balance brought down is 60,000. And this year we recouped the whole amount. That is 6,000. So the double entry will be the same. We are supposed now to credit the short workings and the debit the landlord. So we write here landlord 60,000. So we are through with the preparing the necessary ledger accounts. And this necessary ledger accounts is the loyalties account, landlord account, and the short workings accounts. So if you have any question, you can ask. Otherwise, we've done. And hoping that you have understood the lesson, and therefore let's meet next time when we'll have other accounts. Thank you very much.